Hello everyone, and welcome back to Explain the Charts. Today is October 3rd, 2025, and we are taking an in-depth look at one of the giants of the tech world, Microsoft, symbol Microsoft. We have a lot to cover, including some conflicting news catalysts and a very interesting story being told on the charts. We'll break down the news, analyze the daily, hourly, and 15-minute charts, and then tie it all together to see where Microsoft might be headed next. First, let's get a handle on the current news environment, because it's presenting a real tug-of-war between bullish and bearish narratives. On the bullish side, the AI story remains incredibly strong. Just 2 days ago, Morgan Stanley reiterated their confidence by raising their price target to a lofty $625, specifically citing the incredible 39% annual growth in Microsoft's Azure cloud platform and its deep AI integration. This optimism is bolstered by Microsoft's massive investments, like the $17.4 billion deal for NVIDIA GPU resources, showcasing their commitment to leading the AI race. Even news that partner OpenAI is cutting its revenue share didn't dent the stock, suggesting investors believe Microsoft's own AI ecosystem is the real long-term prize. However, the bearish case has some teeth as well. Last month, on September 5th, the stock took a hit following a weak U.S. jobs report and, perhaps more importantly, the announcement of new tariffs on foreign-made semiconductors. Since Microsoft relies heavily on chips from companies like NVIDIA and TSMC for its AI infrastructure, these tariffs could significantly increase costs and squeeze margins. There have also been whispers of concern about Azure's growth if major clients like OpenAI were to shift business to competitors like Oracle. This has contributed to what some analysts called a rut for the stock post-earnings, where it underperformed some of its Magnificent Seven peers despite strong results. Now, let's bring up the daily chart and see how this news has translated into price action. If we zoom into the period around late July and early August, we can see the market's reaction to their last earnings report. On July 31st, the stock gapped up to its 52-week high of $555.45 at the open, but then saw a massive reversal, closing way down at $533.50. This created a huge bearish candle and marked the peak of the recent rally. Following that day, the stock entered a period of decline and consolidation, which perfectly illustrates that rut analysts were talking about, struggling to regain its upward momentum. Now, let's focus on that tariff and jobs report news from early September. If we look at the candle for September 5th, we see a significant drop of nearly 3%, with the price falling from over $507 down to a close of $495. This move established a key short-term support level around that $495 mark. The volume on that day was also elevated, indicating strong selling pressure as the market reacted to the negative headlines. This level became the bottom of the range for the next couple of weeks. More recently, however, the bulls have started to regain control. From the low on September 5th, we can see the price has been grinding its way back up. This recovery picked up steam in the last week of September, and we can see the price climbing back above the $515 level. This recent strength correlates directly with the bullish analyst calls, like the Morgan Stanley price target upgrade we mentioned. The price is currently battling resistance right around the $520 to $522 zone, which was a previous support area back in August. Switching over to the 1-hour chart gives us a clearer picture of this recent uptrend. We can see a pattern of higher highs and higher lows forming since the last week of September. The price found solid support around $507 and has since built a nice upward channel. Currently, the price is consolidating near the top of this recent move. A key short-term support level to watch on this time frame is the $515 area, which was the previous day's low. If we break below that, we could see a retest of the lower part of the channel around $510. Drilling down to the 15-minute chart from yesterday, October 2nd, we can analyze the most recent intraday action. The day started strong, pushing up towards that resistance zone around $521. However, sellers stepped in, leading to a sharp pullback in the mid-afternoon, finding support just above $510. The price then recovered significantly into the close, finishing the day around the $515.74 mark. This price action shows indecision at these higher levels, with both buyers and sellers being active. The battle between the $515 support and the $520 resistance is clearly defining the very short-term range. Okay, let's switch back to the daily chart to recap and look forward. The picture for Microsoft is complex but fascinating. The long-term trend is undeniably bullish, driven by the powerful AI narrative. However, the short-term is clouded by macroeconomic concerns and technical resistance. Let's outline the key price levels to watch. Critical resistance sits at the $520 to $522 zone. A decisive break above this could open the door to testing the post-earnings breakdown area around $535. Above that, the ultimate target for bulls is the all-time high of $555.45. On the downside, initial support is at $515, followed by the more significant psychological and technical level of $510. A break below $510 would be a bearish signal, putting the September low of $495 back in play. The primary support for the entire uptrend this year is much lower, near the April low of $345. So, what are the potential scenarios? The bullish scenario, which I see as having about a 60% probability, is that the AI momentum and strong analyst sentiment win out. If we see a strong close above $522, it's likely we see a push towards $535. This would be reinforced by any positive news on inflation or a delay in the proposed tariffs. The bearish scenario, which I'd place at a 40% probability, would see the price fail at this $522 resistance. Weakness in the broader market or negative developments in the tariff situation could easily push the stock back down to test $510 and potentially $495. Look for increased selling volume on any down days as a confirmation signal for this scenario. In conclusion, Microsoft is at a pivotal point, caught between a powerful long-term growth story and significant short-term headwinds. Keep a close eye on those key levels we discussed, as the next major move will likely be signaled by a break of either the $522 resistance or the $510 support. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and ring the bell so you don't miss our future breakdowns. Disclaimer: this video is for informational and educational purposes only. It is not financial advice, and I am not a financial advisor. Trading and investing involve risk, and you should always conduct your own research and consult with a professional before making any investment decisions.